Hi, Tony Case here. Today we are going to talk about miners and investors. You may come across intense battles between miners and crypto investors on the internet at various crypto and other forums about what is better or easier, mining or investing, and more rarely trading. Judging by the growth of mining difficulty of absolutely all cryptocurrencies that can be mined, as well as how often new more powerful crypto mining equipment is presented, it's fair to say only one thing: mining is developing and its popularity is rapidly increasing. But what is behind this process? Last time I analyzed what is more profitable, mining or cryptocurrency investing. I found out that under certain circumstances, surely mining can be more profitable. However, in most cases, miners wouldn't accumulate what has been mined for months and years and sell it once a small amount of cryptocurrency has been accumulated, or if there is a local pump in its price. In this video, I'll describe mining and investing processes, complexity of organizing the process, risks, and other characteristics typical of each type of activity. Also, I separated a conventional investor and compare it to a crypto one. I will start with the participants. Who are miners and how are they different from various types of investors? Miner possesses all the qualities of an entrepreneur, of which risk appetite and determination are the key ones. He is able to do the following: take a loan for equipment against his flat as collateral, rent and equip the premises, assemble the equipment, set it up, make sense out of calculators and pools, learn how to use crypto fiat exchange and their services. They frequent mining calculator website and pools personal account, actively monitor exchange rates on the cryptocurrencies mined, as well that of the top 3, 5, 10 coins. Miners rarely mine for future use and sell most of output at current prices because they need to make a living, pay interests on the loan, pay for the electricity and expand the mining rig. No wonder they refer to themselves as businessmen and to mining as business. Crypto investor is also able to take a loan to buy cryptocurrencies, but that happens rarely. Experienced and active crypto investors diversify their own portfolio, gaining new ICOs and altcoins, getting rid of the most unprofitable and most profitable positions. They often hold one cryptocurrency and believe that the future lies with it. In general, they keep up with the crowd fate. They can do trading, as investing and active trading platforms are the same, and check out the latest crypto news and prices of top 20 crypto coins in capitalization. Traditional investor usually invests in stocks, real estate, and keep a certain share of savings in a bank deposit. Quite often does trading using a minimum share of the capital to stay up to speed on the developments. Reads the news and analyst reviews. Mainly follows own investment strategy, checks and analyzes investment tools rather than blindly trusting them. Of course, there are miners investors and miner investor traders like me and many other modifications. In this video, we are going to talk only about field-specific representatives. Let's compare them by categories and find out which of them is better from the standpoint of risk, return, process organization, and public opinion. Both crypto investors and miners are not insured against the risk of theft of cryptocurrencies, computer hacks, loss of keys, etc. Both deal with cryptocurrencies. That means that both participants bear all the risk associated with safekeeping, exchange thereof, and etc. This includes depositing or withdrawing cryptocurrencies to or from the exchange or conversion into cash in case of position closing. A traditional investor is completely deprived of such risks, apart from the data theft to get access to the account, which is uncomparable to a similar situation involving cryptocurrencies. The chances that the miner will lose everything are lower than those of the investor. In this particular case, we are talking about a market risk of delisting of cryptocurrencies from all exchange or a simple devaluation due to the lack of demand for them. The same applies to stock market investing. Companies whose stocks or bonds you purchased may simply disappear. Miners may mine some altcoins and its price goes to zero. It's not a big deal. They'll mine something else. Their only expenses are power consumed and time wasted. This statement is more applicable to graphics card miners and to situations where all is well with Bitcoin. For if it also goes down in value, then no mining or investing would make sense. Unless at the same time, or thanks to that, a substitute for Bitcoin appears and all altcoins would be traded against it. In case a coin goes down in value, crypto investor will lose all of most of funds invested, just like traditional investors. Also, let's not forget the fact that miners have equipment. If it's a graphics card miner, all the components are liquid in the secondary market, with a huge markdown, but surely liquid. ASICs are more complicated thing. They may simply become just kilos of metalware, but it also has value. However, they may go up in price, as it was in December 2017 or January 2018, while investors will have nothing left. New equipment may make mining carried out by current entrepreneurs unprofitable. Equipment that exceeds the capacity of the existing equipment by times or even by an order of magnitude may appear anytime, provided that electricity costs are the same, which would cut some miners out of the game even if graphics card miners are concerned. That was the case with ASICs a few years ago, when a new generation appeared that was much more powerful than the previous one. Recently, there have been ASICs that nearly killed graphics card miners who mine ZEC and similar coins using Equihash algorithm, as well as everything that uses Layer 2, Myriad Growestor, Scaling, Kryptonite and other algorithms. It didn't destroy the activities of GPU miners completely, but made them search for new options and got on their nerves. Also, increase of energy and premises rent rates may come as a surprise if it is not fully owned. As far as investors are concerned, they of course don't have any similar risks. Issues related to the lawfulness of process. Everything with a crypto prefix in general is currently left in legal limbo. Every now and then there are news about a ban on any operations with cryptocurrencies or ban on mining, as well as about legal proceedings against miners. I hope that all that is relevant only for the period of development and there will be no such problems later. Conventional stock markets investors are absolutely deprived of such risks and problems. Everything is legal and there are no legal barriers for financial operations, which is definitely an advantage for this type of investor. Mining can be much more profitable than investing. I analyzed this question in detail in my previous video. However, there are always many question marks. Miners don't usually keep what has been mined for years. They sell their output while mining, but under certain circumstances, mining becomes most profitable in absolute terms. Miners are profitable from the very first day of their activities, while investors have to wait for the price increase and freeze their funds for the indefinite period. Well, of course, when we say profitable, we mean that miners will have some amount of a cryptocurrency a few hours later, and they finish net positive every day. All they need is to mine, wait, and hope. But believe me, this feeling is most noticeable when you have experience in trading and investing, as there you have to wait much longer and may have negative days. Investors may make nothing of that, but miners definitely have fun knowing that their accounts are growing bigger every hour. At the same time, most miners sell some or even most of what has been mined with certain regularity. If the exchange rate is constantly falling, as it has been the case over the last year, the average selling price of the mined output is much better than that of the crypto investor. On the other hand, they may exit their continuously depreciation position portion-wise, and thereby reduce the overall portfolio drawdown. Such approach will surely go against the miner if the rate gradually or abruptly grows. Conventional investors or crypto investors, in theory, would have a better chance of selling their portfolios at favorable prices during the period of active and vigorous growth, and miners would just settle for a period of higher returns. Miners' return depends on a greater number of factors than that of the investors. This is definitely a disadvantage to the miner and an advantage to any investor. On the one hand, the investor suffers a direct loss when the price of a cryptocurrency or an asset goes below the purchase price. On the other hand, that's the only applicable factor. On top of all of that, when the price of a cryptocurrency or asset increases strongly and abruptly, the investors benefit especially greatly as they close their investment with a large profit and may find a new one. The miner, however, would need time to break even and only then make a profit. Miners depend not only on cryptocurrency prices, but also on the network difficulty. That is, the quantity and appetite of those who want to mine it together with them. And this can be particularly harmful exactly during the growth period of the cryptocurrency price they mine. Difficulty also depends on the equipment, but this represents a technical risk. Miners may face a problem with increased power tariffs or premises rental rates, which will also have an impact on total return. Annual rate of return of the investor in the longer term is higher than that of the miner. No surprises here. Only in rare and lucky cases, miner would manage to mine within 1 year more than crypto investor already have. See previous video. On top of all of that, a cryptocurrency pump may occur the following day after the purchase, which will bring no joy to miners, while investors would be able to exit their positions at a big profit. The same applies to conventional investors, no matter what people say about the 9% annual return in the US stock market. United Traders Investment Marketplace and IPO return statistics significantly exceed these figures. We reviewed how significantly they exceed them in the previous video. In a best-case scenario, the absolute annual return of the miner may be assessed as 0 to 100% per annum. If past experience is anything to go by, first-year performance of miners is a break-even at best. Both absence of experience and not always a successful phase of the market are of importance here. Investors, on the other hand, may count on the advantage provided by a possible pump and time saved and get a return of 50% to 300% per annum or even more in cryptocurrencies, and from 50% to 150% per annum in high-risk stock market instruments. Market risks will differ greatly for the latter two. Crypto investors risk 100% of their capital, conventional investors no more than 50%, which has an effect on the potential risk premium. In cases where cryptocurrency prices are in a continuous downfall, miners are better off in the longer term. Frankly speaking, it's important to accept the fact that everything associated with the success of miners is very long-term. More significant advantages of mining become evident only in the significantly longer term. It's interesting that the same is true for the comparison of trading and investing. By increasing the time of holding a position, the probability of making money from investing approaches 100%. I'll cover this in detail in one of my next videos. So, if the exchange rate is down for a long period of time, miners in the end will feel a bit better than investors, if for no other reason than because miners' accounts get bigger day by day and those of investors thinner. In other words, volatility is beneficial for any investor, while the period of a prolonged decline or a flat market are more interesting for miners. Limitation of mining in terms of capital utilization versus the ease of investing. More or less meaningful result for mining, on the one hand, can possibly be reached with at least $5,000 in capital invested. We disregard purchasing only ASIC or PC graphics card. While crypto investing is possible with as much as $10. As far as conventional investors are concerned, they may also start with small amounts of less than $100. Click the link below under the video and you will find a $10 investing. On the other hand, it is not easy to set up a mining process with $250,000 invested, especially if you act alone. In this case, it means a partnership, searching for huge premises, solving legalization issues, seeking power sources of the required capacity, cooling of massive equipment, and similar problems. At the same time, there isn't much of a difference in investing any amount, be it 10, 1,000, 100,000 or even $100 million. The process and arrangements are essentially the same, and a single person can easily manage the whole thing. Difficulty in starting the mining and investing. As I said at the very beginning of the video about the entrepreneur miner, first you have to work for a while before you'll start earning anything. Buying equipment for an average amount of $20,000 or $500,000 is not the most trivial objective, and buying cost efficiency without operating is even intellectually demanding. Premises with cheap or even free electricity are possible, but not many could find it. Any internet connection there isn't stable. The same applies to power. Equipping the premises, assembling racks, supplying power, have the ventilation installed. Surely there are miners out there who use their living rooms or basements, but they are just hobbyists. Assembling everything and adjusting the operation of equipment. It took me 2 full non-working days to assemble and adjust the mining rigs simultaneously, even though I knew quite well what I was doing. When the volume of equipment increases, the time spent increases respectively, and 50 mining rigs would require attention for more than one person over the entire week. Security, maintenance, replacement of defective equipment, fuss about warranties in case of equipment failure if you use GPU rigs. Even if software parts is automated, you will still have to switch algorithms, change pools. You will have to monitor remotely or on-site the operation of all the system. Sometimes it takes much time and may happen rather often. Multi-stage cash out of what has been mined from pool to wallet, from crypto exchange to fiat crypto exchange, and so on. Meanwhile, the only difficult for any investor is purchasing large amounts of cryptocurrency or stocks, and then reviewing charts or just checking prices or searching for new instruments to buy at most. Bought and forgot. Kudos to them. Here is my personal take on that. I felt absolutely amazing while assembling and setting up the equipment. I have adored the process of assembling PCs since school. Not everything can be evaluated with money. In this case, if a person is a fan of such activities, he will definitely feel great. Expensive hobby, but so it goes. Everyone in the end would pay for pleasure, including the investor. Miners spend significantly more time on the process. Investors may monitor prices every minute by opening an application on their smartphones or in internet browsers, or by enabling alerts in certain apps. That's their choice. Or they may just have fun and relax while taking cruises and sailing 7 seas. Miners, much as one would like to, cannot be relaxed. The only way out is to hire someone who will monitor the systems, but that makes sense only if there is a huge rig, which, on the other hand, is a problem itself. As we find out, it is always harder to spend own funds in case of mining. Average and small miners, even if their processes are automated to the greatest possible extent, will still have to check the operability of the equipment and processes stability frequently. ASIC miners would have to do that less often. They don't have many options available. They only need to monitor the operability of the equipment and the current rate of return. Graphics card miners are the busiest people in the crypto world. Monitoring operability of the equipment for them is no small task. There may be 2 or 13 cards in a rig. Each of them may stop working because, for example, the razor has failed or simply Windows has frozen. Well, of course, if you are lucky enough to notice that, each one of my rigs has 6 cards, and it takes me some time before I understand that one of 36 cards in all of the rigs has stopped working. And if it has, that's one hell of a procedure to fix it remotely. Very often you will have to simply go to the premises and do everything on site. That's one thing. Another thing is the continuous check returns of various algorithms using special calculators. Because in any second, somewhere in China or Russian Siberia, 10,000 cards may be launched that use the same algorithm as you do. And return may drop 2 or 3 times, and that very second, a totally different algorithm may become profitable to mine with. And any such development should be known as soon as possible. This explains hourly calculator checking. The way out is NiceHash miner. It will select the best option itself. However, not many people use this mining pool. After all, it is still more profitable to mine specific individual coins. Nobody likes miners. I have never seen any flattering remark towards miners or crypto traders and investors. It is hard for me to say why. Gamers wasting their lives in shoot-'em-up games, as well as ecologists and other minorities, hate miners. It's just that when the word mining is used, many haters immediately appear, spitting and disturbing negative comments, and none of them are even part of the crypto world in any way. Crypto investors are also given bad names quite frequently, but at least death is not wished upon them. However, even they do not appeal much to those who don't have cryptocurrencies. Each of those who hold no cryptocurrencies predicts early death to perhaps Bitcoin and its clones on a daily basis. Conventional investors are much better off. Everyone got used to their doing nothing and just having passive income. I hope you suggest that quotation marks are given here for sake of irony. The most offensive that can be heard in this situation, you must be trading Forex, but everyone got used to this as well. Miners don't like anyone. Miners are adamant about the fact that everyone owes them something, especially investors. It is actually the miner who, having put a Yakov, an entrepreneur, on his neck and taken the risks of equipment failure and rising tariffs, bravely mines cryptocurrencies that investors wouldn't be even able to buy if it weren't for him on a daily basis. ICOs screws the whole thing up indirectly, but in this case it is the miner again who mined the precious ethereum that allows issuing tokens. Also, miners ensure the network security in its operation. Do not even dare to tell them that you just need 2 ASICs to maintain the network in a perfect condition. Crypto investors, on the other hand, look displeased at miners because it is the miners who push the price of cryptocurrency mining big volumes on a daily basis and sell them at the centralized exchange. Conventional investors look at both of them as if they are children and believe that it is conventional investors who allow the whole global economy to operate and develop technologies for the benefit of mankind. Well, everyone may be right in their own way. So, who is the winner? Whose process is easier? In my opinion, there is no straight answer. Of course, conventional investing looks quieter and more relaxed. Almost no technical risks and very low market risk. Everything is absolutely legal and safe. Stable infrastructure. Return is as possible as compared to everything with a crypto prefix. Process is as easy as possible, both at the beginning and during the entire investing period. Everyone loves you, not hatred. Then comes crypto investing with allowance for technical risks and lawfulness of the process. On the other hand, miners or entrepreneurs represents a completely different type of activities that require an approach that is absolutely different from investing. This process is 10 times more complicated, associated with a huge number of risks that include all of the risk of a crypto investor, but at the same time, the number of people involved in mining is comparable to the number of crypto investors. Therefore, you need to decide for yourself what is more important to you. Daily revenue or potential growth in future. Return on your investment that is highly likely within 1 or 2 years, or waiting for super high profits within 1 to 10 years. Whether you have both money and premises with socket or just money. Whether you enjoy the process itself or not. And by the way, one does not exclude the other. Thank you for watching. Good luck. This is Tony K. Bye.